Hello, guys. I hope you're well and having a fantastic day. Currently, I'm on some euro dollar shorts, which I entered earlier this morning. I'm just going to fill you in on basically how I got in on the trades and what I'm looking for, where I'm looking to exit, and why I looked for these entry opportunities. My chart is slightly slow, but it's okay. So just moving over to the daily time frame. So over here we had some nice areas of support and resistance which had been targeted. We also had a high level just up here. But for us to go to this level and look for shorts from up here, we do need to break this level, retest it, and continue up on the daily. So we broke, retested, use this as support, this zone here. So we had support here. We used it as resistance as well. If we look back, we can see it's support as well. And essentially what we did, we had a break retest, it longed up to here, and then we looked for a short opportunity today. So I don't enter on a Sunday night, obviously just because market orders getting filled. I like to wait till Monday London session before I enter a trade. So we had the wick up, basically run the highs, take out the stops. Price is now formed around this region inside here on a lower time frame, and that's where we're looking to basically ride our trade down from up here all the way down to the next region on the daily time frame, which is just over here, and we are front running our TPs at 1.11250. So just to fill you in on a bit of maths on this trade, so I've entered here, I have a 15 pip SL. Once we come down 15 pips in profit, which will be just about here, and I'll mark this up for you. So I just want to highlight to you guys like how I take these trades, what I'm looking for, and how I manage them as well. So I have an EA on my charts on my PC, and essentially what it does is it calculates the lot sizes for me. So I've entered on the run up to the highs. It's now coming back down, and basically we want to get in on the stop hunt. That's the way I trade, and that's the way everyone should trade because it's the most efficient way and get the highest RR that you can. I'm doing an intraday position, so I'm just looking to swing this down on a corrective move. Yeah, it could be it could end up being an impulsive move all the way down, but I'm just trying to catch this correction and essentially retest back to here. And then whatever happens. I'm out the trade. I've got 3.45%. I'm actually doing 2% risk as well, so it should be double this. So basically what I'm doing is once it wicks this area here, I've hit a 1-to-1, and then from there what I'll do is move my SL to break even. I also have a sell stop order at 15 pips, so then I'll get in on another 2% trade, which will mean that this trade is risk free. I'm only risking 2%, and if it goes back up, I'll lose 2% and I'll get taken out break even on my original trade. It's essentially a way just to squeeze out those extra few pips, which I'm quite keen on doing anyway. So there's always some pips to be taken out of the market, and if you can see the opportunity then and it fits your criteria, then I'll definitely recommend taking it. So I'm in this position. I'm basically going to come back to you guys later and just show you the results of this trade. And just remember, this was my break even here and another short opportunity just here, risking another 2%. So we have total 4% on the market. And then my next entry will look just like this. We have a 2-to-1. So you see how the 15 pips will get broken even here. Okay, and then once it's in here, it's broken even, and then that means if it corrects back up, we get taken out and only lose 2%. However, once again, I'm doing this method to get in on a 4% trade and swing it down to just here, and I'm front running the TP because sometimes, as you know, the market will come down, it doesn't quite hit your order, and then it goes the other way. It's probably one of the most frustrating things, but it happens, so you just got to live with it. So that's why we're front running these. We have a nice trend line as well, but we're expecting the market just to have a pullback and a corrective move. As you can see, euro is overextended, and we just need a slight corrective move, obviously, to build up the buyers again, for them to build up positions and get back in the market to rally price again if we are going to go higher. So either way, this price action does look bearish. It's just a case of holding out and seeing what happens towards the New York session, which is starting in about 3-4 hours. And hopefully we get some significant move before that, and then get a corrective move for the New York session before we continue going in the direction that we want. So I'll keep you guys posted. Okay, hi guys. This is just a updated video from this morning. We had some nice euro-dollar shorts on this area of rejection, so it was an area of resistance. However, it has been used as support as well. You can see over here, here. And if you move along, you can see, yeah, it's ranged in between it, but it has, once it's moved out and away from here, we have used it as support and resistance. So currently, I'm obviously looking at rejection zone from here. Daily candle on Friday closed bullish through this previous zone. So I'm looking for price to continue up into, what I was looking for this morning was price to continue up into this zone, wick it, and then obviously to do some stop hunts, and then price to pull back. Basically a corrective move, because if you look at the way price action is on this chart here, you just know that it's overextended. Yes, a bull run can continue for a while, or a bearish run can continue for a while, but as with everything, there has to be pullbacks. Otherwise, there will be no buyers or sellers in the market. So it just needs to correct the move, and obviously give confidence to people that they need to get in on. Basically, give people an opportunity to get in on positions that they might have missed. And then maybe possibly even pull back all the way down here, create a nice inverted, some sort of inverted head and shoulders, and then try and move up. Don't quote me on that. I don't trade head and shoulders patterns. I'm just trying to give you guys some ideas for some trades. So dropping down to a lower time frame, let's go for 15-minute time frames. 15-minute time frame. So obviously price drove up. We could tell that it's going to do a stop hunt. We had the gap here, so I wasn't placing any sells whatsoever. I was heavily tempted to do so, however I didn't. Waited for price to fill the gap, and then once price had filled the gap, we were just looking for price action to see how price was reacting around this zone. Price continued to rally up into our daily rejection zone, which is here. So price drove up into here. I was looking on the 15-minute time frame. I'm obviously looking to see how price is reacting. So we've had a bullish engulfing here. The way price has moved up, it's wicked, and then that's where I'm looking to sell, because I think someone mentioned it in our group the other day, and they're 100% correct. You're looking to sell off the bullish candles, and you're looking to buy off the bearish candles. So, it depends on how you trade as well. Obviously, if you're a momentum trader, then don't do that. But if you want to catch the tops and the bottoms of the market, you want to be trading the opposite of what everyone else is doing. And if you want to use market sentiment, that does help as well. Basically, I just wanted to provide an update, and of course, I'll provide an update towards the end of the day. This was a 3.45 risk reward, so risk 1%, make 3.45. If you want to risk 10%, risk 10%, you get 34.5% back. You just times this by 10 and move the decimal place along. So obviously we're just waiting for price pull back down. We could have another break retest on this zone here. As you can see, this zone has been used as an area of rejection. And then once price has done so, then we could possibly see this being used as a bounce level. Or a break retest. I drew a short-term trend line just here on the 15-minute time frame. We had a sell here, price pulled back over here into my other block. So I just drew it from the high to the to basically where the market just it was the open on Friday, but you want to draw, basically just want to highlight the gaps, because price will trade around these gaps. So I've just drawn it from the high down to the base of the candle here, and then just wait to see how price would react. Price was reacting quite nicely around it, so I took another short again. I scaled in this trade, made it break even, took out 30% out of the market, and then as price came back up, took another trade. My SL was at this area here, and then it came back down again. I've broken even the trade again, and then on a pullback up here, I entered another position. So I've entered here. 1.11680, so let's just call it somewhere around here. And then my other entry was at 1.11758, just here. So I'm compensating, I assume, for spreads. or whatever, but I use an ECN broker, so I'm just using the ECN account type. Means tight spreads, so I can get in on these intraday positions, which is what I'm doing. I've slowly sort of lost interest in swing trading. I love swing trading, but it's just not as fun, and to be honest, it just doesn't give me that excitement. And I don't like sitting around waiting for a while for a trade, because obviously I've got a lot of time on my hands. I just enjoy trading, and if I can sit and trade, and I wouldn't pass up the opportunities. Obviously, just wanted to update you with the trade. So obviously we took the euro dollar position earlier this week. We've been selling off euro since the basically the 21st at 9 a.m. We took our first position. We then scaled in a further three positions total, a further 2 positions here. So we took one here, one here. Scaling in essentially means that I was just adding positions whilst maintaining the same amount of risk as well. So I was keeping the risk at break even, adding a new trade, break even, adding a new trade, break even. I then closed out the trade down here, probably made about 5% gain. And then today I looked for entry opportunities again, got in on the trade, basically next to no drawdown. I remember it just absolutely free falling all the way down. Scaled in again, this is the blue line which I marked out. Retested the underside of my zone, scaled in, took TP at the original target, which was yesterday. And as you can see, we could have bought off the target, but I'm out the trades, out the market, and I'm not going to trade till tomorrow anyway. So I just wanted to update you guys from start to finish, just essentially what I'm doing, how I'm placing the trades, what I'm looking for, and like just showing you that it's not too difficult just to place a trade and forget it. Obviously some nice big moves going on euro dollar right now. It's a shame I'm not in on the market because it's wicking one of my zones actually on my PC. So yeah, I hope you guys enjoyed this, and if you haven't already, check out Benji's ATR video. Essentially discusses how he uses the ATR to place his stops, and it's a more dynamic form to actually be more efficient with your stop loss and get a higher risk reward. So if you haven't checked that out already, make sure you guys check that out as well. Cheers.